Well, holy smokes, everyone. Just as people were starting to turn bullish and thinking the crash was over, we have just got some huge breaking news and some more insights about what's really happening with companies' earnings, what's really happening with companies' profits, and we've just got some new breaking news on what just happened with Facebook. And the reasons why this is so important, everyone, because this is giving us some insights about what's really happening and what's really going to be coming for the stock market in the future. So everybody, this is going to be a good one. Let's not waste any time. Let's get straight into it. Look at this, everybody. Facebook shares plunged more than 20% on weak earnings and big forecasts missed. And what have I been talking about, everyone? I've been saying ad rates are down. This is going to affect companies' earnings. And this is Q4 for Facebook. So I think their Q1 results are going to be even worse. So earnings per share were $3.67 versus the $3.84 expected. And revenue was just $33.6 billion versus the $33.4 billion expected. But what you also have to factor in with revenue is inflation, because if inflation goes up and their revenue goes up, but it's not going up higher than inflation, in real terms, they're not actually growing revenue. They're only growing it because the cost of things are going up. It also says here that daily active users are down and monthly active users are down. But let's have a look to see what's really behind this. So the company recently renamed to Meta came in below expectations on daily and monthly active users, as well as projections for the next quarter. Facebook said revenue in the first quarter will be $27 billion to $29 billion. Analysts were expecting revenue of $30 billion. Again, I've seen advertisers very hesitant to spend on marketing right now. So maybe they're preparing for something. Ad rates are down on Google, and I'm sure they're down for Facebook as well. And this is a sign that businesses aren't very confident right now. But there's also some huge insights, what we've been talking about, that is now starting to affect companies' growth. Listen to this. Facebook said it's being hit by a combination of factors, including inflation, privacy changes to Apple's iOS, and potential supply chain disruptions as advertisers and other macro-prudential challenges. It blamed the lower than expected growth in part on inflation and supply chain issues impacting advertisers' budgets. Well, holy smokes, everyone. That's what we've been talking about in the channel. We've been saying inflation is going to hurt companies' profits because the cost of goods are going up. These supply chain issues are going to hurt companies' earnings because if they can't get the goods to sell them, well, then they can't get the revenue. And also, companies aren't going to want to advertise if they've got no inventory to sell. So they say here, Facebook's results come a day after Alphabet cruised past estimates and sending the stock higher on Wednesday. Well, I don't agree. I think what really sent Alphabet shares higher was when they announced a 20-to-1 stock split, because this creates a lot of speculation for investors. But let's have a look what's happening to Alphabet shares now in the after hours. Well, as we can see here, it's looking like it may be a red day tomorrow, because in the after hours, they're down 1.7%. But it's not only Facebook that got hit today as well. Look at this, everyone. PayPal stock closes down 24% in its worst ever trading day. Again, people, listen to this. Shares of PayPal fell Wednesday after the company provided weak guidance and that it blamed it on inflation. And also, for those wanting to know, PayPal also missed user growth targets in part to 4.5 million illegitimate accounts that joined the platform. But we've got another company warning about the supply chain issues and inflation. So also Starbucks earnings miss as higher costs weigh on profits and coffee chain cuts earnings outlook. Listen to this. Starbucks CEO Kevin Johnson said on the company's earnings call that he is anticipating higher inflation for the rest of the year. So we're seeing on one hand the Federal Reserve saying it's going to go away, where we're seeing companies that are dealing with these products are saying, no, we're going to see more and more inflation. Likewise, supply chain issues are also expected to be an issue. As a result, Starbucks is planning more price hikes after it's already raised prices in October and in January. Well, everyone, this has definitely been a very interesting and a mixed earnings season. We've seen some companies being able to rise above the issues, but really that's only companies like Apple and Microsoft. So of course they're going to get first dibs on all the products and they're not going to get hit as hard. But we're seeing the majority of companies, they're getting absolutely destroyed by the supply chain issues and by inflation. But with no more stimulus checks, with consumer debt already tapped out, and this just came out today as well. Look at this, everyone. Companies unexpectedly cut 301,000 jobs in January with all the issues still going on with the pandemic. And this was a massive miss because they were expecting that 200,000 jobs would be created. So not only there was no jobs created, there was 300,000 jobs lost. This is just another piece of evidence that tells me companies are not confident and they're starting to cut, and they're cutting to the bone. So while it has been a good earnings season for some, I think the next earnings season will show us the company's profits and revenue is starting to fall. And what this means for the stock market, like what we're seeing with Facebook and like what we're seeing with PayPal, investors are going to have to start discounting these shares and bring them back to fair fundamental value. So everyone, that was just a quick update with what's going on with companies' earnings like Facebook and PayPal and Starbucks, and some things that are showing us that supply chain issues and inflation is really hurting them. But what do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.